Hello traders, the title of the video is Fibonacci Trader explains the 214% Fibonacci extension level. Alright, so you have been using the Fibonacci extension for some time and you are wondering, okay, what is the 214% Fibonacci extension level? Alright, or how can you trade at the 214% Fibonacci extension level, or you want to understand more, okay, the trading activities that often occur at the 214% Fibonacci extension level. All right. So in this tutorial, I want to share with traders, okay, explain to traders the 214% Fibonacci extension level. The first thing that I want to share with traders is that reversal, bullish reversal or bearish reversal that often occur at the 214% Fibonacci extension level are purposely generated. I have a reason to start with this one. So when you see that a financial instrument is going up, all right, and it reaches the 214% level and it stop going up and start coming down, you have to realize that that reversal is purposely generated. That's the first thing, or that's the most important thing you must understand about the 214% Fibonacci extension level. The reason is, if the financial instrument is going up, all right, and reaching the 200% level, traders that have been buying the stock at the starting point have doubled their profit. But what they want to do, if the market participant, most importantly, all right, the big market financial institution, do not believe that that stock should go up above the 214% level, which means the stock has exceeded its true value multiple times and they don't want it to go up more, they will stop the price going beyond the 214% Fibonacci extension level. So the reversals that we usually see at the 214% Fibonacci extension level are purposely generated, which means there is a barrage of orders to sell to stop the price going up more. All right, so that's the first thing that you need to understand, all right, about the 214% Fibonacci retracement level. All right, so what we can deduct from that is that if a financial instrument manage to go above the 214% level without too much hassle, as it did here, you see here, there's a high chance that it will go up a little bit more, at least to the 3.1, to the 2.1, at least to the 238.2% Fibonacci extension level. So what I'm trying to say to you now is that if they want to stop, if the big financial institution want to stop the price going up, all right, they will block it. All right, this is just to speak to you as a normal way. They will block it at the 214% Fibonacci extension level. They will just stop it there and the price will not go beyond that level. So what we can deduct from that is that if a financial instrument manage to go above the 214% level, there is a high chance that it will continue to go up and reaches the 238.2% Fibonacci extension level. You need to understand that very carefully. So what is happening is that the financial instrument is going up. If it reaches the 200% level, which I already talked about, we talk about the Fibonacci trader, explain the 200% Fibonacci extension level at the Pro Trader YouTube channel. So you want to watch that video so you may understand the 200% Fibonacci extension level, all right? But now, all right, if they do not believe that the stock should go up more, or the stock has exceeded multiple times its true value, which means is overbought, And the big financial institution, after performing their fundamental analysis, checking everything for the management, the market share, and everything else, and they don't want it to go up more, they will block it, which means they will stop the price going beyond the 214% Fibonacci extension level. If you watch this video, that's the most important. You need to understand about the 214% level. So, all right. So what is happening? So stock is going up. It reaches the 200% level first. All right. If they don't want it to go up more, they will place orders at 214% level, which means few pips above the 200% level to sell it. So the stock has doubled. All right. We reach the 200% level, but they do not believe that it's going to go up more. Orders will be placed a little bit above the 200% level, meaning that at a 214% level, there will be orders placed there to stop it going up more. And those are influential market participants that will make that decision. They will stop it. They will place orders there to sell, and the price will find it very difficult to cross that 214% Fibonacci extension level. All right. So, on the other hand, if a financial instrument managed to go above that 214% level, it means that they believe that it should continue to go up more, which means they allow it to go up more. So, if you are a bullish trader, you can highlight the 214% on any time frame, and if the price goes above the 214% level, you can use the top-down trading method to buy it gently, because they will allow it generally. All right, this is not 100%, so be careful. It's not guarantee that you're going to empty your saving account and place at a 214% to buy. Right, most of the time, all right, they will allow it to go up more, because if they're going to stop it, if they do not believe that it shouldn't go up more, they will stop it at 214% level. So price come to 200% level, or they will replace at 214% Fibonacci extension level to stop it. Similarly, in a downtrend, price going down, it reaches the 200% level, and they do not believe that it should go down more, because they believe that it should go up instead. They will place a barrage of orders to buy at the 214% Fibonacci extension level in a downtrend to stop it going down beyond that level. So what we can deduct from that is that if the financial instrument is going down and it also managed to cross the 214% level, it means that it will continue to go down a little bit more, at least to the 238.2% Fibonacci extension level in a downtrend. All right. There are more we can do with this information that I'm sharing with you today. As you can see, this stock here, all right, this is another American stock, so a Visa Incorporation. So if you are, you use, your credit card, Visa debit card, Visa debit, Visa credit card. This is the company Visa Incorporation. You can see that as the stock was going up, all right. So how did I draw my Fibonacci extension? You see the price went up and pulled back here. And then I apply Fibonacci extension to that bullish move, and I highlight the 214% level right there. You can see that as it came there, you see people took profit there. You see there's a bit of shadow. You see that candlestick bar, this one here, this one here. There was got a bit of shadow on top. The professionals were very, very careful there. You can see the second candlestick bar is a doji. It's not by mistake that we have those candlesticks bar there, because the professionals understand that if there will be a barrage to stop it, it will be in that zone. So they were very, very careful here. But then they allow it. You see this one? It's a nice one. It peels through it. All right, so you need to be a little bit patient. You want to allow it to come down. You want to see it coming down. Then you know that, okay, there's a barrage. I'll talk about it in the next minute soon. So you see this one, it crosses. This is why we deduct from it. So they allow it to go up more. So there you see there's a pullback. It breaks above and retests the 214% level. So you see a breakout, retest of the 214% level. There is a high chance that it will go to the 238.2% Fibonacci extension level, even continue to go up more, because there's a barrage there. All right, I will be recording another video about the 314% Fibonacci extension level, so stay tuned. I will be talking about Fibonacci trader explain the 314% Fibonacci extension level, and I will be telling you more about the 314% Fibonacci extension level. But now we want to talk about the 214% Fibonacci extension level. All right, you get it now? So what we can say also to traders, talking about Fibonacci trader, explain the 214% Fibonacci extension level. There are orders, very bearish orders being placed at 214% level in an uptrend, all right? If they want, repeat, if they want to stop it, there will be orders to sell at the 214% Fibonacci extension level. All right, so if you can find out where people are selling, check the volume bar around the 214% Fibonacci extension level. All right, so first thing, all right, reversals at 214% Fibonacci extension level are purposely generated. All right, there will be orders at 214% Fibonacci extension level if they want to stop it going beyond that level in an uptrend, and there will be orders to buy at a 214% level if they don't want it to go down more. All right, so this is what they are doing. So price come to 200% level, orders will be placed at 214% level to stop it, and if you manage to cross the 214% level, it means that they allow it to go up more. They believe that the stock should continue to go up a little bit more. Another thing that we want to tell traders when we are talking about the 214% level, the 214% Fibonacci extension level is almost, this word is very important, almost equal to the median line between the 200% and the 238.2% Fibonacci extension level. So I told traders to draw the median line between two Fibonacci extension level. So as you can see, the dark line here is the 200% level, and the top one here is 238.2% level. But because I don't like to use the 238.2, I would like to change it now to 238. All right, I like to use exactly 238. I don't like to use the 238.2% level. Okay, but I'll leave it like this for now. But if you were using 238 exactly, you'll see that the 214% is almost, not exactly equal, almost is quite close to the median line between the 238.2% and the 200% Fibonacci extension level. So price breaks here, it breaks above it gently and retests here. You are looking for break above, retest, check out the 214% level. You are looking for break below, retest, check out the 214% level. Understand that the next resistance is 238.2% level. Quickly, understand also that a financial instrument can consolidate between the 200% and the 238.2% level for some time. So what we can look for bearish chart pattern. So if you see, repeat, if you see or you recognize or you identify a bearish chart pattern at a 214% Fibonacci extension level in an uptrend, there is a high chance that you are looking at a high probability bearish trading setup. But in order to control the risk, one should always use a top-down trading method. So bearish chart patterns that are occurring at 214% level are likely to generate a valid bearish trading signal. On the other hand, bullish chart patterns that are occurring at the 214% Fibonacci extension level in a downtrend are likely to generate a valid, a bullish signal. All right. So look for bearish chart pattern at a 214% Fibonacci extension level in an uptrend. This will be the first indication that they are trying to stop it at the 214% level, and you want to take part into that trade. All right. Those who sell at a 214% Fibonacci extension level, so professional trader, what they are doing here, if they want to stop it at 214% level, so orders are placed at 214% to sell, they will place their stop loss few pips, 10 pips above, the 238.2% Fibonacci extension level. So the orders are placed at 214% level to sell. If they want to stop it, repeat, if they want to stop it, then they will be placing their stop loss a little bit above, the 238.2% Fibonacci extension level. If you look at this stock Visa, this is what has happened here. Now, they allow it to cross above it. You see here, this is what we are saying. They did not stop it. They did not sell it as such. You see some bullish trader came out of their trade here. That's why we have a doji in this one. But there was no barrage to sell it. So they allow it to go through it, which means it can go to the 238.2% level. But if they were selling at 214% level, they will place their stop loss few pips above the 238.2% Fibonacci extension level. So here, as I told trader before, the 138.2%, the 238.2%, okay, or the 338.2% are critical resistance level in an uptrend and critical support level in a downtrend. So here you can see that they try. So some traders try to sell it, okay, in the vicinity above in a zone of a 238.2% level. It's normal because it's a critical resistance level. But talking about the Fibonacci trader explains, okay, the 214% level. You want to understand that a reversal. So especially for area wave traders, you can 1, 2, 3, 4, 5 waves. All right, if you stop at 214% level and you start seeing, okay, corrective waves in the zone of 214% level, you want to pay attention carefully to that. All right, this is for area wave traders. If you see a bearish chart pattern at 214% Fibonacci extension level, you need to pay attention to that in an uptrend. And if you see, okay, bullish chart pattern at a 214% level, you want to pay attention to that. All right, so those are few things that we want to understand about the 214% Fibonacci extension level, because as the price reaches the 200% level, those who have bought it at the beginning have doubled their profit. But if the stock is overbought, okay, in comparison to its true value or its book value, and if the big financial institution do not want it to go up more, or they believe that the stock is overbought, okay, properly overbought, they will place orders at 214% to sell, and they want to stop it there, and the price will not cross that level, and they will place their stop loss at a few pips above the 238.2% level. Financial instruments sometimes can consolidate between the level of 200% and the 238.2% level. The 214% Fibonacci extension level is almost equal to the median line between the 200% and the 238.2% Fibonacci extension level. So what we can deduct is that if the financial instrument is going up, and they allow it to cross above the 214% level, it means that there's a high chance that it will continue to go up more, at least to reach the 238.2% level before it may find a bit of resistance. You see here, they allow it to cross it, then it find a bit of resistance at 238.2% level, because 238.2% is a critical resistance level before they allow it to go up more. All right, so stock that crosses the 214% level have more chance to go up more. Those who crosses the 214% level in a downtrend are likely to go down a little bit more to reach the level of 238.2% Fibonacci retracement level. So if one is looking for reversal at 214% level, one should be a little bit patient, look for bearish chart pattern. You can use Fibonacci, you can use area wave or area wave count plus a corrective wave, and watch that zone carefully, because if they're going to stop it, it will stop there squarely. But I will be talking more, I will be recording another video, and I will be talking more about the 314% Fibonacci extension level. We can also talk about the 114%, the 114%, 114% Fibonacci extension level. It's a similar scenario, but it doesn't make any sense because they are usually crosses above the 114 level. But the most important Fibonacci extension level that are ending with 14, 114, 214, 314, okay. The most important is the 314% Fibonacci extension level. But we usually see a reaction because some stock, as they double in value, all right, they have reached their peak and they are not creating any more value, and the small money will come in and place a barrage of other hedge funds, big financial institutions, banks, we place orders to sell in that zone. So one can monitor the volume bar in that zone, the 214% level. We can do a lot of things with the 214. So you can highlight it. If it breaks above, so you are looking for breakable retest, watch the 214% level. You're looking for break below retest, look for the 214% level. And as always, when you learn something new for the first time, you need to practice first. The reason is you have to see different scenario. So if, for instance, you watch this video and you see one scenario, you trade it the first time, it works successfully, you say, yes, George, that's what we are talking about, okay? But if you apply this method and it didn't work, you may say, oh, this method didn't work. But what you shouldn't do is that if it didn't work, you should hold it and say, all right, why it did not work, all right? So this is why we say to traders to practice, to see various scenarios, why it worked today, why it didn't work yesterday, why have I missed? So those are the questions traders will continue to ask, so they may start polishing, okay, their 214% Fibonacci extension trading. In all cases, when we see a trading setup break above retest or break below retest at 214% level, or we see a bearish pattern, or the fifth area wave is ending exactly at 214% level, or a corrective wave is underway at a 214% level, in all cases, one must use different time frame trading method to control the risk, because without that, one can get into trouble. If you look carefully here on this monthly chart, with that candlestick, you see the first one with a bit of shadow plus the doji. At that point in time, we will be watching this stock, because we will say probably they are selling, all right? But if you just sell it because of those two candlestick bar, you see, it just crawled, it just went up. So, but if you use a different time frame trading method, you will see that it's going back up, all right? So you will be part of it, but in fact, it's a breakable and this one exactly at a 214% level. You see how it came to touch it, and then you have that doji there, all right? So you'll be thinking, all right, probably they are going to stop it, but don't just sell it because of that. Use a different time frame trading method to trade it like a pro, all right? So this is the end of this tutorial about a Fibonacci trader explains the 214% Fibonacci extension level. I will be recording another video when I will be explaining to traders the 314% Fibonacci extension level. There are similarities between the 214% and the 314% Fibonacci extension level, but there are more to 314% Fibonacci extension level that I will be sharing with you in another video. So stay tuned, and I speak to you, okay, in the next video about the 314% Fibonacci extension level. So if you have any question or suggestion, this is your time to put in the comment section. I read all the comments, and in due course, I will be recording another video to answer your specific question. If you think that this video is truly useful to you, okay, let us know by giving us the thumbs up. If you think that, George, this is another useless, disgusting, blah, 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 let us know by giving us the thumbs down. It's very important for us. Your rating, okay, is very important for us. This will allow us to improve our recording, all right? But if you think this is an essential tutorial that other Fibonacci traders must know about, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about the Fibonacci trader explains the 214% Fibonacci extension level. Happy to meet you all and speak to you very soon. All right, so we're recording the 314% Fibonacci extension level very soon. Okay, that's it.